Today is the 23rd of July, 2026, 10 a.m. CET and 4 p.m. Manila time. This episode, we talk about Japan's bold investment plans under Prime Minister Takaichi, China taking the lead in shaping global AI policy, state funds intervening to save China's stocks, and major IPO perking up India's stock market. Hello to our listeners. I'm Mel Lopez, Chief Economist for ASEAN.
And I'm Peter Lundgreen, the founding CEO of Lundgreen's Capital.
This is Sound Economies with Mel and Peter, a weekly East meets West podcast by Lundgreen's Investor Insights. Join us as we analyze developments in major economies and financial markets globally. Hi, Peter, and hello to our audience. We're back with another episode. How has the last week been for you, Peter?
Yeah, it's extremely nice. It is a summer holiday season here in Denmark. So
Yes.
so there's been a bit of summer sunshine. That's nice. Fairly okay. Busy with investments and all our also new defense investments. So it's nice. So we have something to do, and of course the shop is always open every day, year round. So this how it is. So we're actually very happy in the company and also have a bit time to enjoy, of course. It is a slower season. Yeah, what about you, man?
Well, it's a lot of, I guess, political more than economic developments recently, at least here in Asia.
Mm.
Here in the country, in the Philippines, there's some impeachment going on against our vice president. So that's been entertaining to watch. And I also am closely monitoring the political situation in India, where they
Mm.
call it the cockroach protests. So it's very interesting, and I am not sure how it will unfold as well, but it seems like the youth groups are very, very much taking their dissatisfaction to the streets, and I'm monitoring how it goes, how it affects day-to-day lives and perhaps the financial markets there as well. Though so far it's not gone into that scale just yet. So exciting
Mm.
times as always. And actually, we do have a lot of interconnected moving parts, so to speak, for this episode today. And I will start here in Asia, Peter. Some exciting news coming out of Japan. So we have closely watched the Japanese economy and how it's gonna fare under the new Prime Minister Takaichi. We did
Mm.
say, and she has delivered on her promise to be aggressively expansionary.
Mm.
Now that the cabinet, the Japanese cabinet, has approved her expense plan, basically her spending plan for the next couple of years. The bold feature there really is a 2.3 trillion investment roadmap from here until 2040. So that's over the
Mm.
next 13 years. The point is really for public investment to crowd in private capital, and there's a very, very bold attempt to um, channel investments into strategic industries. So semiconductors is a very hot and in-demand sector, as well as technology, um, AI development, shipping and logistics, energy, as well as aerospace. So those are her target sectors, and the goal is to I guess, inspire private sector investments into these areas by trying to also funnel money from public spending into these sectors.
Mm.
A very interesting discussion is how observers are saying that the drafts about of this investment blueprint or government spending blueprint
Mm.
removes mentions of fiscal consolidation. So in so many words, that's a government that's trying to spend within its means or live within its means. And um, Japan has for so long grappled with very, very high debt burden. They're now at 250% of GDP as of 2025. It has been a sore spot in the economy because investors are very nervous about this ever growing debt that
Mm.
has, of course, surged because largely because of the COVID-19 pandemic. But even before that, they were really on this uh, piling debt trajectory. And now that its government policy is shifting towards more spending, basically expansionary policy, that is increasingly becoming a concern. We have flagged that as a concern
Mm.
in previous episodes, and today is no different. There was also discussion about the previous drafts, although it has been dialed back, about a reference to how the Bank of Japan should set interest rates. Of course, expansionary policy in the fiscal sense also kind of goes hand in hand with low interest rates, but you can't really instruct the central bank to do that. Otherwise, that is a separate problem altogether. So that has been, shall we say, removed or addressed in the final version of the spending plan that has been approved in cabinet. And yeah, but still, the nervousness about debt prevails, and that's likely the one of the major reasons driving the yen lower. We are at
Yeah.
the 40-year low at 163 per dollar,
Yeah.
and yields on Japanese government bonds are also rising. And yeah, the question really is, how do you fund this very ambitious investment and spending plan?
Yeah.
Um, there is also a live discussion in Japan on whether they should reduce the food consumption tax, because cost of living has been increasing, and it's not helped by the ongoing oil crisis due to the U.S. Iran conflict. So
Mm.
that is another problem if you want to expand spending, and then here's another potential revenue, foregone revenue. So a lot of moving parts here, and really it all boils down to where will the money come from, especially when you can't really borrow a lot more because of your piling debt.
It's a heavy card to play, yeah.
Mm-hmm.
And it's also a very long time plan, view,
Mm-hmm.
and also commitment. Um, as a simply to spend money, so much money over such a long time. Yeah. So as we're talking about more than a decade. It's a huge spending plan basically. And as you mentioned, investors, some part of the investors
Mm-hmm.
are not welcoming it. Yen is dropping, and we are talking about, as you say, 40-year low. It means something, and it is. We consider it as an outright reaction on precisely the rising Japanese debt. It is that is the reason why yen is getting sold off. Honestly, this is how you create a financial crisis. It can be an isolated financial crisis for the country itself, but this is how it happens, and this is how you move in that direction. The yen is dropping ongoingly. Should be scary for investors. And politicians, they might say, okay, what do we care? Because let's say it drops another 10%.
Yeah.
Politicians should care because if your currency market is the own currency is such under pressure in a structural way as they're forcing yen into, it is simply generating a destable situation. It is at a certain point the market crashes, and it doesn't necessarily need to happen. This is the rare situation it happens, but this is an outright way to force um, a very
Instability.
unstable situation. Yeah, and it can be politicians say they don't care about 5% drop in the yen, and then that's the price. When it happens, it often leads to more. I don't believe that. I don't simply don't believe that the politicians, they know what they're playing with. It is fire, dangerous fire. So this is we are actually worried. We are concerned.
Mm-hmm.
We are talking about one of the biggest economies in the world. We know it is very as a sort of partially domestic oriented, but this really can lead to a partial collapse for Japan, or it can lead to and it can spread because it will not only be seen as a currency crisis, it will also be seen as a credit crisis. and credit is not sort of as too much government debt is out of fashion. That we have pointed at for some time. It
Yeah.
is out of fashion. Investors are nervous about it, and we just need to look at US. Yeah. So this
Mhm.
is how to say it is extremely interesting. Of course, when looking at the Japanese economy, will there be a boost? It's interesting to rush into as a shareholder, also simply
Yeah.
buy more shares. There's a huge deficit risk on the currency.
Mm.
So it's this is what we call it a dangerous game
Yeah.
for
We
sure.
will keep watch for sure, especially on the nitty-gritty of how they implement this spending plan. But yeah, we are cautious extremely at the moment. We can move to a neighboring country, Peter, and also one of her favorites, China, of course, is hard to miss given that it's the second largest economy in the world. And something exciting came out of Shanghai just over the past weekend.
Mm,
The Chinese government did host a World AI conference. It was a 3-day conference with global leaders, headlined by President Xi Jinping, and they
mm,
formally launched a 29-member World AI Cooperation Organization. So they have members from Asia, Africa, and Latin America. Very strategic. These are their mostly their partners in terms of trade as well as loans under the Belt and Road, for example.
yeah,
And these are very strategic allies that they are now got to their side for shaping AI global AI policy. So it was a showcase. So at the surface level, it was kind of a flex where they showed off AI robots that were chefs, parcel package assistants, like they were setting up the boxes for shipping, AI robot dancers, AI baristas. So it was a
mm,
essentially a gallery of what how far AI can be pushed at the moment. And more
yeah,
than that, President Xi kind of took a jab at the US and during his speech where he said that AI development cannot be a solo performance of a country. So it's a, not naming Trump and the US, but essentially that is it. And
mm,
it's widely seen as a China trying to get a leg up against other peers in terms of shaping global policy, AI regulations,
yeah,
possibly towards its own interests. It does want to be the global AI leader. It does have its um, competitive advantage in some parts. In China, software development is cheaper. They have the rare earths advantage for components of the physical supercomputer and microchips.
mm,
And they also have cheaper costs to run data centers because power is cheaper in China. On the other hand, US maintains its dominance in the development of advanced chips as well as software, mainly out of Silicon Valley. So that's the really the battleground between the two. And I guess this attempt to take the lead in terms of AI policy and governance is great way maybe to make sure that China can catch up and play to the rules because the rules are coming from here. It's worth noting that the Secretary General of the United Nations was in Shanghai during this conference. So
mm,
I guess you can say that they are off to a good start in this space. But yeah, a lot of room to grow in terms of shaping the direction of how AI will be regulated. So it's always a device versus humans narrative online and offline, but maybe
yeah.
this is a start.
Yeah, we come across a couple of times the big global AI battle, and it is between US and China, obviously, the absolute two leaders within AI. They are far, far, far ahead of the rest of the world, including Europe. It is just another step in trying to get the global dominance. That's what
Mhm.
China initiated with the event or making the AI club around the world. It's a big bet actually for them, and it gives an indication to investors that We can discuss pricing on tech companies and AI companies, but they're most likely there to stay. Pricing, yes, wow, but the long-term perspective is that there will be probably a heavy government focus, which embeds in itself some support. But of course, it also can generate some erratic risk scenarios where a government just take decisions that is based on whatever interest they react in. Yeah, and that can also happen in the US. Also, it is not it's sort of just a Chinese issue, I would say. But that's for sure for investors to consider as well. So it is a big battle, and it will go on. And as an investor, you need to be there somehow. Yeah, that's a challenging thing. But Mel, it led to an interesting market operation. Let's call it this
Mm-hmm.
way. To be nice, it was an outright intervention last Friday, in particular Friday, a bit Monday. Chinese government controlled or public controlled funds in China. They actually bought heavily into to Chinese AI companies, as we saw the sort of the sellout and sell off in globally in the AI sector. It's sort of about 9 to 10 billion
Bit
they
sizable,
invested.
yeah.
Yeah. It's really sizable, and they basically turned the market around as the local Chinese market. So these funds, government
Mm-hmm.
controlled, however you want to call it, but they basically are. They were used to intervene in the air market. Now, this is something we don't like. The stock market should be left to itself. Authorities, public funds, controllers, whatever we have seen it across the world, how they now and then act. They should leave the stock market alone because the price is the price. They should only be active if there is a completely squeezed
Meltdown.
situation. But it underlines that everything is trying to be influenced in China. AI means so much that
Yes.
it's simply so much at stake that also the stock market is it's kept up. So it's even there they place the bet. Yeah, it shows how much attention it has and how much attention the AI
Yes.
stocks in the stock market they have. Yeah, that is very impressive. A story we notice it, and there seems to be, as they say, they will be active in the market again if the
Mm-hmm.
price are going down. Who that is worth intervention in the stock market as well. It's pretty heavy actually. Yeah.
Now
So
that appetite has been down for like or a bit doubtful towards global AI shares, here comes China, at least the Chinese government trying to save the day. But that is the elegance of an open market. It resolves, it corrects its pricing. That is the long-term trend. But if they are concerned about short to medium-term fluctuations, it would really be the case that it would be this costly to like retrieve, so to speak, the valuations that were maybe it at their level maybe 1 2 months ago. But yeah, we don't really like seeing that. We want to see the market determining its pricing as it should.
heavy actions in AI once again as a so it's very powerful, extremely powerful, and that is actually what we need to take away
Mhm.
ongoingly. Yeah.
Let's move, Peter, to India. A bit of interesting story for once that stock market excitement over there is not driven by AI per se, but an IPO that is expected to at least perk up interest to go public in the Indian market again. And we are talking about SBI Funds. So it's the country's largest asset manager, which happens to be owned by the State Bank of India, which does the acronym, but it's nice to see that, yeah, the market debut has been oversubscribed and they were able to raise $1 billion out of it during their
Yeah.
listing. And
Maybe seen in India as a sort of a lead towards other IPOs. First of all, it's a absolute decent sized IPO, and as you say, oversubscribed, good interest. There are quite a few more IPOs in the pipeline. Some have been held a bit back from due to the conflict between US and Iran. But it seems healthy now, and companies that will come and bring the IPO forward. That
Mm-hmm.
is very convinced. And it's a very good sign. We have been calling for more IPOs since, I don't know, 1.5 years.
Yes.
Uh, so we're very happy. And the other interesting perspective is, of course, something is always going on Wall Street. But there's a growing number of IPOs around the world. They're also in size growing. And predominantly, we see a lot of
Mm-hmm.
IPOs out of the emerging market countries. That is, again, it's very healthy. Consider some of the IPOs as interesting, actually, as not just to be in, but yeah, it's just good. And we see it as a healthy indicator for the private capital market in the emerging market countries, and we actually see it as it underlines growth, yeah,
Yes.
and it's healthy growth. It's good growth. So this is very, very positive from an emerging market perspective. Then we will await to see if something happens in Europe. But as as we could see, the focus today was we kept it in Asia. It was simply too interesting what was going on there.
Yeah, the second half of the year might be a more interesting and opportune time for IPOs. The first half of the year looked promising until US Iran happened. So
Uh,
maybe the companies that have held back on their listings during the first 6 months may as well find the latter part of the year to be the, I would say, more ideal. Well, it's still far from ideal, but more favorable conditions to finally pursue their listing. So we're excited to see that unfold. But as we always wrap up of the podcast with our outlook and our sunshine views, I can start with Asia and say that still there are some clouds in the horizon. The US Iran situation has remained very volatile despite an initial idea of a truce, of a negotiations, but we do still see that there are more opportunities for growth and improving valuations in the region, particularly in emerging Asia and China and Southeast Asia are more favorite areas for to watch out for. But we do see that there are challenges. Inflation could stay high, therefore interest rates could also stay high, and but still the growth here is far more attractive than the developed economies that in the West.
it's our usual outlook, and as you say, yeah, clouds on horizon, but still somehow the sunshine is still awaiting, and we do see a fundamental okay global sort of story. Also, households are still hanging in. Yeah, it'd be fine to consume a bit more, but still there's a certain base there. So we are just unchanged in our view with also still overweight risk. We like the non-listed risk opportunities in the fixed income markets, shorter in duration, but
Yes.
we like the credit risk as counterpart risk. It's okay. And we're heading into an August. August is the main holiday month on the northern hemisphere, and it typically slows down in the stock market or in the finance market
Mhm.
in general during August. But we recognize that this oil price spike now again will generate volatility and some uncertainty in a market that is a bit more thin, can generate even high volatility. We would not be sort of surprised, but if this is the reason, then we can live with the volatility so far. We are in a situation where we would like to see a solution on the U.S. Iran conflict, but so far we hang in, so to say.
The sooner the better, of course.
Yeah, so that's probably the outlook. We're okay.
We'll keep watch about latest market developments and we'll be back next week. Thank you, Peter, and thank you to our listeners.
Yeah, thank you to everybody.
Thank you for tuning in. As always, we keep a watchful eye on market shakers and movers. Catch the next episode of Sound Economies with Mel and Peter, a podcast by Lundgreen's Investor Insights. Available on Spotify, YouTube, and wherever you listen to podcasts.
Lundgreen's Invest has secured a historic quadruple exit for its high-tech defense fund. Following the sale of 4 investments to the Danish defense company Omni Capabilities, the fund's value jumped by as much as 40% in just one day. The good news? This evergreen fund is officially open to new investors with an exit possibility every 6 months. Visit lundgreensinvest.com to know more about this co-investment opportunity.
Lundgreen's Capital has been in the business of investment advisory and wealth management for over a decade, with our high-performing and multi-awarded funds to show for it. We're taking this to the next level through an IPO in 2 years. Join us in this journey. Visit our website to learn more.